Hello traders, welcome back to the Forex Geek, where we dive deep into the tool that can help you make smarter trading decisions. And in today's video, we're going to be talking about how to place a stop loss and take profits when trading on the Forex. Remember that understanding exactly where and how to set these levels are crucial for protecting your capital and securing consistent profits in the Forex market. If you ever struggle with the knowing precisely where to exit your trades or how to manage your risks effectively, this video is for you and this is what you need. Make sure you watch until the end as we will learn a step-by-step method for placing your stop loss and take profit correctly, helping you become a more disciplined and a more profitable trader. So stay tuned. So we start by understanding what stop loss and take profit orders are. The stop loss and take profit orders are essential tools in Forex trading. They are designed to help you manage risks and secure profits effectively. A stop loss order is an order that automatically closes your position when the market moves against you, and it helps reach a predefined price level. By setting a stop loss, you limit the amount of money you can lose on a single trade, protecting your account from excessive damage during the unpredictability of the market movement. It is a safe net, ensuring that even if you trade and the trade doesn't go as planned, your losses are going to remain manageable. Now let's see what the stop loss is about. Let's assume we took a sell trade from this area in the market. If we took a sell trade, we decided when price gets to this resistance level, we would assume that we would want to take a sell trade in this area, trying to take a sell trade from this resistance level. When price broke structure and came back to retest that area, we decide to take a trade from the resistance line. Remember, you have to first analyze your chart, and as we can see, there was a break in structure here. We wanted to take the retracement. From the retracement, we wanted to ride the move to the downside. We took a trade from our resistance level. We put our stop loss just above our resistance level. Even if this trade resulted in a loss, we can see that by placing a stop loss, we were stopped out of the market to avoid unnecessary more losses. This is typically what the stop loss is all about. Now, the take profit is used to close your position once you have entered a trade. Why the take profit is also important as the stop loss, because it helps us exit our trade that are being in profit. It is a way to ensure that you do not miss out on profits if the market reverses after reaching your target price. Together, your stop loss and your take profit orders create a structured approach to exiting trades, removing emotional decision making and enabling disciplined trading. Now let's assume we want to take a profit. Let's at this area where market broke price. Let's look at this area. This is a way we can implement this strategy. This we can notice that the price is trending to the upside, but as we can see, price broke structure at this area. Signifying that sellers are in the market. What we need to do is wait for a retest of this area, because price has broken the area. We wait for price to retest our price broke this area, which is the support area. We wait for price to retest the support area, and as we can see, price broke and retested this area, signifying that sellers are now in the market. So I would take my trade at the newly formed resistance level. When price break and come back, we take our sell trade at this area, we put our stop loss just above the previous swing high, then we take our profit. Remember, this is not this is not a standard trade. I'm just giving you an example of where we can place our take profit and our stop loss. So we put our take profit at a region where we feel is most suited. We can go for a previous support area. This can be an area where you can put your stop loss, your take profit rather, or we can go for 1:2, 1:3. You can also put it at a region that we assume price will get to. This is where you place your stop loss, your take profit. Remember, your take profit is a way of exiting the market and to secure the profit that you are riding from the potential trade you are taking. So this exactly is how you set your stop loss and your take profit. Remember, the stop loss and take profit orders are not just tools, they are strategies for survival and success in the forex trading. By using them effectively, you can navigate the volatile forex markets with greater control and focus on long-term growth rather than short-term setback or missed opportunities. Now let's see how we can implement a trading strategy, a step-by-step systematic approach for strategic exit. To execute a strategic exit in the forex trading, you need a systematic approach that combines both technical analysis and risk management and a clear decision making. Here is a step-by-step strategy for placing your stop loss and take profit effectively. You first start by analyzing the market condition. We begin by analyzing key levels in the market such as support and resistance level, and as I can see, this is a support level in the market. We can see this is a previous resistance level that got violated at this area. We can also see that this is a resistance level. We start by analyzing our support and resistance level in the market. We can also analyze using trend line, and as we can see, if we are to use a trend line, we can see the market is trending to the upside, meaning we are in a bullish market. Dating as far back, we can see that we are in a bullish market. As we can see from our charts, this is a bullish market, looking for buying opportunities only in a bullish market. For example, if you are trading in this bullish trend, you might want to set your stop loss just below the nearest support. That means if you are to trade in an area, the nearest support should be where you should set your stop loss. This is how you place your stop loss in the nearest support, meaning if price gets to your trend line, when you want to take your trade, let's assume I'm taking the trade from this trend line, you place your stop loss just below the previous support. As we can see, we have marked out our previous support area. This is where we'll place our stop loss, and we place our take profit in the nearest resistance area, or we can aim for at least 1:2, meaning for every dollar you risk, you aim to make at least twice the amount, 1:2 or 1:3, as the case may be. Look at, there's also a support in this area. These are areas we can decide to leave the trade. This is an area we can decide to place our take profit in the market. So we don't just enter our take profit and stop loss blindly. We should always put them at a region that would invalidate the setup, or a region that when price gets to, you are expecting further price behavior in that area. Like we expect that when price gets to a resistance area, we would receive a form of retracement. So this is where you can set your take profit to these particular areas. Now this ensures that even if the trade results in a loss, your profitable trades outweighs them, because when you set your take profit using a standard risk to reward of 1:2, even if you take a loss, your next trade would help you remain in profit because you are taking a 1:2 risk to reward. Now let us avoid setting it too tight near a key resistance level. Assuming we want to take a trade here, let us avoid taking our stop loss too tight, because the market can decide to go beyond the support or resistance level. So we need to always give our stop loss enough room to account for market noise. If the price is testing a support level, when price is testing a support level, always remember to place a stop loss slightly beyond that level. Assuming we are taking the trade from this area, we have to account for a slight we have to account for price moving slightly beyond that region. We can account for price moving slightly beyond that region, just to avoid putting our stop loss too low. This is what we have to do in price. See the way I set the stop loss just below. You have to accommodate room just in case price wants to move around a bit. The same with your profit target. You have to focus on realistic targets based on the market condition. There is a tool you can use that can help you set your profit and your profit levels and your stop loss placement, and this tool is called the Fibonacci retracement and extension levels. By using this tool, it can help us further capitalize on the market by getting exact areas we can place our stop loss and our take profits in our trade. Let us start by analyzing the market. We can see that the market shows that a strong bullish momentum is in our favor at this area in price. We can first start by noticing we are in an uptrend market where price is respecting the trend line. As we can see, price is respecting the trend line, and we can see that we are above this support area. So we start by drawing our Fibonacci retracement from the low to the high of the chart. And the Fibonacci levels has key areas. The key area that we are looking for, the sweet region in the Fibonacci area, is the 61.80% level. So when price gets to that area, we will decide to take our stop, we will decide to take our long order. We'll enter a long position in this area. Remember, you can put your stop loss. Since we are using a Fibonacci tool, we put our stop loss just below the 100% area in the Fibonacci area. You can see we put our stop loss just below the 100%. Then for your take profit, we can use the Fibonacci extension, or we can still use the Fibonacci retracement. The Fibonacci retracement will take our profit at the 0% level. This is where we can put our take profit 0% level. If you want to use your Fibonacci retracement, you draw your Fibonacci retracement level and you take your profit around the 1.618 level. This is where you set your take profit too. This is how we can combine the Fibonacci tool to get a good area for both profit and stop loss in our market. Finally, you execute your trade with confidence. Once you have set both your stop loss and your take profit on your trading platform, and you allow them to work out automatically when you take the trade, because this helps to eliminate emotional decision making and ensure disciplined exits based on your preferred criteria. Remember, consistency is key. Always stick to your plan and adjust it based on evolving market conditions. Alright traders, we have come to the end of this video. Engage with us in the comments below. We want to hear about your experiences. If you found this video helpful, do not forget to like and subscribe. Turn on your notification bell so that you wouldn't miss out on more trading tips and strategies. Thank you for watching, and I will see you in the next video.